Welcome to the Garrington Winter Market Review. This short summary video highlights some of the key themes covered in our latest research report. We look at how the property market performed last year, and some of our team members from across the country share insights as to the trends we're likely to see in 2018. We hope you find this video interesting, and as ever, if we can assist you with any property related matter, please do get in touch.
It has not been a year for the faint-hearted in prime London, with slow progress on Brexit negotiations and a snap election adding to the headwinds in a market still reeling from the last round of stamp duty reforms. The number of sales in 2017 was broadly in line with 2016, low but no lower. Prices fell in some central areas, particularly from asking prices that many had long considered unsustainable. But there was also some slippage in the prices paid for high-value homes, which made eye-catching headlines for the mainstream press. Our latest research reveals that almost £1 billion has been knocked off the asking prices of homes currently for sale across prime London. This equates to an average of £223,000 per property, or, put another way, an average discount of 9% on all properties that have been reduced. We explain in our research report the methodology we have used to create a heat map showing the locations which currently offer the most opportunities for buyers. As seen from this infographic, the areas of inner London with the highest opportunity ratings were in core central prime markets. Mayfair and South Kensington both returned high scores, along with Marylebone, Victoria and the City. As seen from this timeline graph, history has shown us on numerous occasions that high-value London property takes the knocks first, but frequently bounces back fast. Nick Dawson from the Garrington London team specialises in high-value property acquisitions and shares his views on what is currently happening in the market and his expectations for the year ahead.
The market so far in 2018 has been relatively busy. Despite the initial first week, there have been a number of sales agreed in prime central London locations in the £5 to £10 million range. And we understand that buyers have been mainly domestic in origin or international buyers with pre-existing real estate assets already held in the capital. However, our research indicates price reductions are continuing to occur, particularly in zones 1 to 2 in the prime postcodes. Although these are with decreasing regularity, and the price reductions appear recently to be of less magnitude than in 2017. The market outside of central London, in zones 3 to 4, is slower to react, with many sellers either having held their homes for a longer period of time or owners being more hesitant to accept the reality of the market. Many sellers in the mid-market, so around that sort of £1 million to £3 million range, are more financially dependent on mortgages and therefore more reluctant to be negotiable, as every pound is critical. Some super prime areas are showing clear signs of being very good value, as the more committed sellers are open to offers and wish to open a serious dialogue, provided the clients we represent are in a strong position. Inward investment into London is creating new trends. Crossrail and other infrastructural improvements to London's transport system have undoubtedly already had a significant positive impact on the buyer's behaviour and decision-making process. Looking at the year ahead, there may well be continued periods of uncertainty, especially towards the end of the year with further Brexit negotiations between the EU and UK government. But there's a sense of opportunity, especially amongst UK and expat buyers who have yet to face any real stern international competition, as had previously been the case in 2009 to 2015. If nothing else, Brexit has created a chance for UK buyers to re-establish themselves as a real estate elite, unabated by Russian, Chinese or Middle Eastern buyers.
A combination of house price inflation and punitive stamp duty rates for high-value homes means that the upfront capital required to buy a home has soared in many parts of the UK, while earnings have changed very little. Borrowing rates might still be at an all-time low, But this is not much help to buyers who cannot raise enough capital to fund a deposit and stamp duty. We analysed a typical step up the property ladder from a 3-bedroom semi to a 4-bedroom detached house by region. We then calculated how much capital the buyer would need to accumulate in order to make the move today compared with 10 years ago. The sheer size of the cash sum needed today has made the next step up the property ladder too high for many to climb, persuading them to make do rather than move up. That, in turn, is causing reduced liquidity throughout the property chain, from bottom to top, as fewer homes find their way back onto the market at all price levels. In high-value areas of the country, the issue is greatly exacerbated by stamp duty costs, but the knock-on effect is felt across all markets. Today's prime buyers will need, on average, to find £55,000 more than they did 10 years ago. Jennifer Mullocks, from the Garrington East team, discusses how these affordability factors are affecting market dynamics in regional property markets, such as Cambridge.
There's been a noticeable influx of London buyers looking for buying opportunities in the Cambridge market. This has led to an increase in local property prices, which in turn has led to some buyers diverting their attention to opportunities in villages surrounding Cambridge or even further afield. The challenges that our clients are experiencing in the local property market are generally based on affordability. This is led by low stock and high demand, a trend that we're experiencing in many regions. In the prime market, typically homes over £1 million, the level of stamp duty buyers are having to pay continues to bite, and is being reflected in the offers that these buyers are prepared to make. As our research reveals, finding an additional £55,000 is simply not achievable for some purchases. Looking at the year ahead, we are confident that regional markets will continue to grow, albeit that affordability will remain an ongoing theme. Vendors seem to be more sensible with their pricing, which in turn has encouraged buyers to feel more confident to engage with the market.
If you would like to see the full findings in our research report, please visit garrington.co.uk/property-news. Thank you for watching, and please do contact us if we can assist you with any property matter.